Hello everybody, this is Pat Walker at Mission Winners. So we made up our mind that we want to invest in stocks to make money. After you've made up your mind, then we stick with it and nothing gets in our way. You want to be an investor, investing in stocks. You want to make money maybe for retirement, maybe to help your kids through college, to support your family, whatever. But you want to do this. That's the first thing we have to determine. Do you want to do this? You say, yeah, I want to do this. If you do, I will pour my heart into you. I will share anything and everything that I know. I will help you any way I can. I even make private videos for people. You probably know that, right? For the VIPs, you've asked questions and I make videos for you. I take this really seriously and I want to help. So we made our mind up. We're going to do this and we are going to succeed. Once we have made that mind up, then we say to ourselves, now I've got to get down to it and I got to get it and I got to get it right. That was the big reason why we started Mission Winners, was to speed up that learning curve instead of trial and error and maybe I'll do this and maybe I'll do that. That'll drive you nuts, all right? So we go this way. A couple of things to consider. We know that we want to buy stocks that will go up in price, but we more importantly know this, the characteristics of stocks that can go up in price, both fundamentally and technically. And this isn't just made up. I've got things to share with you, and I'm going to post a couple of these right now. I'll make this a little bit bigger so it's easier for you to see. And I've got this in another slide here that we'll get to in a minute. Point 9, more than 2/3, and I'll make this even bigger for you. More than 2/3 result of the stocks that made these moves, industry that occurred due to strength within an industry. Most of the outstanding successes showed a period of greater relative strength. The average relative strength in the stocks before their big moves was 92. That's crucial. All of them had positive earnings estimates. This is from the book 40 Great Stock Market Winners that I've had, and it's been my resource tool for decades. It really helped me. And anything that I've ever read from that book, it's only, I don't know, it's probably only with the chart. Each page has the charts on it. I think it's got 30 charts. The whole book's probably 40 pages. That's it. That's all. But right here, these are the foundations we really use. I'm going to slide this out and I'm going to make this a little bit bigger for us so that you can see specifically what I'm talking about. We're going to pick this one first. I'll make this bigger for you. It's very important. One, important. Points 2 and points 5. If you can stick with this, you will be light years ahead of most people. And this is again from the book 40 Great Stock Market Winners. 87% of these stocks, and I'm going to back up and say this. We want to buy stocks that are in leading groups that have a strong relative strength rating, an accumulation distribution of A or B, a composite rating of 90 or higher. They're within 15 to 20% of 52-week highs. They're over $12 a share. They trade more than 200,000 shares a day. And they have either great earnings and or great sales. All right, we're real hardcore with this, but it's really not hard. Once we get this down, it works. 87% of these 40 great stock market winners had earnings of 30% or higher. 71% had earnings of 50% or higher. Folks, basically take the averages. What we're saying, approximately 80%, 8 out of 10 of these stocks had earnings up 40% or higher prior to their breakout, prior to their moves. That's an edge that we use. You've seen me talk about 40% earnings. Now you know why. Sales numbers, 0.5. This is crucial. We key on stocks that have either great earnings and or, you don't need both, it's nice when you have both, average sales of 40% or higher for 2 quarters. And we've made screens for this. Many of the stocks, the super stocks that we've had, have either 0.1 and or 0.5. And we use this to our benefit. I just wanted to point this out to you. Again, what I'm trying to do, this is for the new people, new VIPs. We got to learn how to it's easier for me to say on a Saturday night. We have a lot of new VIPs. And I want to get you up to speed. It's like, what do I do now? Okay, I've signed up. What do I do? I'm giving you the foundations on what we do that works. And it's documented. It works. And again, this is research from Bill O'Neill and Company. Yeah, I think the man knows pretty much. I'm going to show you another one here. Right here. And you can read this. I'll let you read this. Go ahead and soak it up. And then we talk about leading groups and sectors. It's all there. But the last paragraph says it all. Nearly 50% of a stock price's performance is related to its industry and sector. It's from Bill O'Neill and Company research. So let's synthesize everything. What are we looking for? We are looking for stocks in leading groups or sectors that have either great earnings and or great sales and a chart pattern that everybody can see. We're going to look at some charts too to get you up to speed. And again, we've got a lot of new VIPs, but more importantly, we also have veterans. And it's good to constantly go back and hone our skills. Think about this. The greatest hitters of all time, the greatest hitter of all time, Ted Williams, took batting practice consistently when he was on his streak. How about that? Ted Williams. You think I'm making it up? Look it up. You'll see what I mean. So let's go in. We know the fundamentals. Let's go in and look at some past winners. And I'm going to show you quite a few of these. All right? We're just going to click on them in random and see what we have. And I'll make this bigger for you. And I'll slide it in. Right here. Acacia, clean and simple base entry right here. Earnings were up 193%. We bought this in 2016. Price, $45.05, right there. The gain, well, you can see. It's on the sheet. We are making a book, our own book, of winners, admission winners. That past winners that we've had too for study. But you can see this. That's good money. I'll click on it. Let's do like 15 to 20 of these. All right? Here we go. Here's the next one. Square. Clean and simple base entry right there. Max list stock. Sales up 45% when we bought it. You can see it on the chart. Look at the simple. I'll make it a little bit bigger for you too. I want to do that. There we go. This is important to me. You're important to me. There we go. Right there. And look at the trend up the ADMA. Right here. 30 to 50. Now, you're not going to sell it at 50. That's good money. Let's do another one. NEO, one of our biggest winners ever. This and Tesla were $1 million winners for VIPs too. How do I know that? Because they told me. And I'm not going to tell you who. I'm not going to give you the names of the people, but clean and simple base entry. Another one and another one. Buys right here. We'll call it $16 and more and more. Stock went up almost to 60. Basis here, and then it runs up to the mid-60s. These were our sells right there. Look at that. Revenues were up 140% when we first bought it. 140%. Team, that's what we're looking for. Look at that trend. Is that beautiful? Oh, by the way, it was in the top 10 groups. There you go. Let's do another one here. I'm going to show you this one. You can say, wait, this isn't a clean and simple base. What is this? You see this low and you see this low? What is it? It's the higher low setup. This was a new issue. Sales were up 215% before we bought it. Buys right here. Okay, we'll call it $75. 75. This thing went up to $240 a share. That is a quadruple. Look at this. That's a thing of beauty. Let's do another one here. It's Beyond Meat again. I'm just going to click on random. Okta. Buys right there. Clean and simple base. All of these, team, were past key list stocks. Every one of them. Okay, I'm not going to lie to you. That'd be wrong. You can see the clean and simple base. Let's do another one. Right here. Cyber. Clean and simple base. and the run. Earnings were up 92% when it was bought. Can you see what we're doing? We're synthesizing the foundations. Great earnings and or great sales in leading groups, and they have clean and simple basing formations that everybody can see, and look at the volume pickup. Over and over, that's what we want. Datadog. Base right there. Look at the volume. Lifts up, sells into strength, and we made money. We'll do another one here. In mode. Base. Earnings were up 109%, sales were up 55% before we bought it. Buys right here. It's dang near a double. There it goes. Over and over. Let's try another one. Match group. Clean and simple base entry. Right there. And note the run. And that is well more than a double. There's Datadog. I've shown you this one. I'm just clicking it. Roku. There's a name some of you know. Look at the base breakout right there. Look at the volume. Sales up 51% when we bought it. You can see over and over companies that have clean and simple base breakouts. Every one of these was a key list stock. Every one of them. Every one of them was on the key list before they broke out. Every one of them. And I'm just sharing them with you so that hopefully it helps you. THC. Look at the base. Look at the volume pickup and the move. That's nice. It's simple. GSX. Long base. Look at that right there. Look at the volume pickup. Folks, 43 to 90? And what are we talking about? 20 trading days? It was in group number 4 when it broke out. Earnings were up 450% and sales were up 357% before we bought it. And the composite rating was 99. There we go. There's GSX again. My apologies. Just clicking these on random. Pinduoduo. Base entry right there. Lifts up. Pulls back. We had good buy here. Comes back. All right. But note. Finds support and then lifts. Sells into strength. I'll make this a little bit bigger for you, to make it worth your while. There you go. Isn't that nice? I'll do a couple more for you. Vive. Just a base. Volume pickup. And note the trend. Earnings up 80% the quarter before we bought it. GSX, I've shown you. THC. This is from 2018. Look at the lift. It's nice. Pause the video at any time. Advanced Microdevices from last year. This took off when I was in Colorado. I mean, look at the move. Right in here. We'll call it 56 up to 90. That's good money. I'll do just a few more for you. Tesla. Buy right there. Simple base. It was a leading stock in a leading group. We bought here. And by the way, this buy was right in here. We'll call it 350, 360. That stock went up. I said it on the chart. 600 points. This is one VIPs. I know of several for sure. They made $1 million on this. Right here. And I'm not bragging. They did it. They did it. There you go. Microsoft. Buy right there. This is from 2019. And look at the move. That's it. Anyway, I want to synthesize all this together for you. Please know, this isn't a case of Pat Walker bragging. No, this is a situation of showing you what to look for. Fundamentally, we know what to look for. We also know that we want stocks in leading groups. We like stocks with a composite rating of 90 or higher. We want stocks within 20% of 52-week highs. We want companies that have either great earnings and or great sales. We demand that. We want stocks with a composite rating, preferably of 90 or higher. We want stocks with an accumulation distribution of A or B. We combine those variables together and we don't buy low-price stocks. And it assures us that these will work. Not all of them, and I will never say that. But more times than not, they do work. And it's documented here. And here's the beautiful part. I talk about a clean and simple base right here. Price is good above the line, starts to fall below the line. You can sell for a very small loss. It works. By the way, Bill O'Neill talks about 7-8% stop our losses. Off the record, he likes to keep losses smaller than that. Okay? That's a fact. He's one of my heroes. What a nice guy. Just a kind soul. Not arrogant, just a nice guy. And I'm grateful to have met him several different times. Anyway, I was talking to Owen. The reason I wanted to make this video is because it's baseball time. Baseball. Love the game. But the idea of putting together what to look for. Putting together what to look for from a fundamental perspective. Great earnings and great sales in leading groups and sectors. But also, that's the fundamental, the technical. Chart patterns, simple bases that everybody can see. Why? Again, it increases the odds that they will buy also. And isn't that what we want? So we take both schools and we combine them together. And that helps us find these stocks that can really move for us. And I've been doing this a long time, okay? I started in the business in 1986. So yeah, I've got experience, the real world, in the trenches. And what I'm trying to do is speed up your learning curve for increasing profitability, consistent profitability, faster. And if I've done that, then I feel like I've helped you. And that's my goal. So I apologize, this video is a little longer. It's knocking on right at 18 minutes. But everything I just shared with you is the real world. And it's relevant to us succeeding. And that's what I want for you. And I will also share this with you. I rejoice when I get a message from y'all or somebody types in the room in the VIP feed, hey, I did this, and I'm like, yes. I'm so happy for you. That's great. And as I've said before, your priority, and I will do anything and everything I can to help. Last point I'll make, it's the weekend. I'm making this on a Saturday afternoon, Saturday evening. I hope you'll be able to get out and do some good things. Get away from it, rest, relax, rejuvenate, and just get ready. Get ready for the new week. And the beautiful thing is this, I'll say it again. The market's turned around, it's starting to pick up, and we know what to look for, fundamentally and technically. And that's huge. That's just huge. You know what that means? We can hit it out of the park sometimes.